Hello and welcome to the Gold and Silver Club weekly commodities review in alliance with ACM Gold, presented by myself, Phil Carr, and Nick Kelsey at the Gold and Silver Club. Today we will of course be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end of week summary for the metals, the energies and agriculture. We'll be looking at the top trades of the week, covering live market commentary and technical analysis. We'll also look at the week ahead, so key events looking forward, and of course answering any questions you may have too. So first of all, we'll take a look at the price of gold this week and the fundamentals. So gold has risen to 3-week highs as geopolitical tensions boost the safe haven appeal. Gold prices surged to a 3-week high on Friday as growing geopolitical tensions in Iraq and Ukraine boosted safe haven appeal. Gold prices strengthened on Thursday after the U.S. President Barack Obama authorized airstrikes in Iraq to put an end to the onslaught by the militants and began airdrops of humanitarian supplies. Gold price opened the week on Monday at $1,282 an ounce and touched $1,322 an ounce by Friday morning, up 3.12% or 400 points within 5 days. Iraq is the world's second biggest oil producer in OPEC, and the news has had a bullish impact on crude oil prices. On Friday morning, WTI rose 0.77% to trade at $98.09 US dollars a barrel, whilst Brent crude oil advanced 0.88% to 106.38 US dollars per barrel at the same time. So as the turmoil in Iraq intensifies, oil prices are likely to advance further in the short term. Meanwhile, the market spotlight remains focused on Russia. Earlier in the week, NATO reported that Moscow had deployed 20,000 troops on the border with Ukraine in preparation for possible ground invasion, which also boosted demand for the commodities. On Thursday, Russia banned imports of food from the US and the EU in response to sanctions from the West, and this raised concerns over potential disruptions to commodity exports from Russia, such as oil, natural gas and wheat, driving prices for these commodities higher, as highlighted in our top trades of the week, which we shall take a look at very shortly. Before we do so, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world, so gold, silver, oil, natural gas, agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications, speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent several years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. Through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications. We've appeared frequently on financial television. Okay, so we'll just take a look at the gold price at the moment. Currently trading at 1,310 US dollars per ounce. So we're just shy off the daily highs by about 12 US dollars. So we spiked up to 13.22 a little bit earlier on this morning. We'll take a look at the technicals very shortly. Before we do so, we'll have a look at the top trades of the week using the Gold and Silver Club signature trading strategies. So first of all, we've of course caught some lovely breakouts this week on gold. We broke above the 12.97 level. This week we had a risk of 50 points on the trade, so each lot traded was a $500 risk and the profit on that was 150 points, so 1,500 US dollars profit for each lot traded for a lovely 3-to-1 on gold, and we continue to surge to the upside just today. Natural gas, we also had a lovely breakout earlier on this week. We had a profit on that of 90 points. The risk on the trade was 45 points, so $450 for each lot traded for $900 profit for a 2-to-1. And we also had a nice breakout this week on platinum following the breakout on gold. We had a risk on the trade of 80 points. In fact, earlier on today we came up to just over 200 points profit on this trade for a 2.5-to-1, so 800 US dollars traded there for a profit of between $1,600 and $2,000. And finally, Brent crude oil, yesterday we had a big surge at a key level of support around the 104 level. We got a lovely setup. The risk on this trade was 40 points, so $400 for each lot traded for a profit of 120 points, so 1,200 US dollars profit for a 3-to-1 on Brent crude oil. So it's been a very active week for the commodities markets. What we shall do now is we'll turn our eye to some live market technical analysis. So we'll have a look at how the markets are shaping up now for the US session. So the first market we will actually take a look at, we'll go over first of all here to platinum and palladium. You can actually see we've got this trend channel on both of these markets, particularly you can see it very clearly on palladium here. We are continuing to follow this very clear trend channel. We've come down again, tested the lower end of this trend channel just on Tuesday this week. We bounced off it on Monday and Tuesday as well, and you can see here we've had a nice spike to the upside. We've had over a 150-point surge here on palladium up to the 864 zone. So what we'll be looking at next week here is potentially more upside. You can actually see if we go over to a larger time frame, a nice big dragonfly doji which is formed right at the lower end of the trend line here. So I would say palladium is looking very strong as we come into next week. Now I've had a bounce off a very important level of support, and I hope some of you caught a re-entry on this. We had a very good opportunity to get back into this overall very strong bull market which we've been in so far in 2014. Palladium, of course, one of the top performing markets. We broke out to 13-year highs on palladium just 2 weeks ago, so fantastic market for you to get into at the moment on these pullbacks. Platinum as well, platinum did have a lovely pullback as well. Again, I'll just make this trend line a little bit more obvious for you. So we've had the third bounce off this major trend line, and we've come up actually to key resistance here. So we have come up to the 1490 level, which was a natural take profit zone. You can see we're getting a bit of a doji forming at the moment just on the daily time frame. The next key level here to break for platinum as we go into next week will be the 1490 level. So platinum has offered us some great buying opportunities. We found support at the lower end of the trend channel, and now we're looking for a breakout next week above 1490. Again, it's offered a very good opportunity to get in long. You'll notice there's been a downward trending channel on platinum throughout the last 2 weeks. You can see this downward trending channel just linking up to the highs and the lows, and we have now broken out of that. So it's looking strong at the moment as we go into next week for both platinum and palladium. Of course, this also did confluence with the gold and silver markets. Gold in particular, what you want to have a look at on gold at the moment, if we just zoom out, we'll take a look very quickly at the weekly here. We've got a very strong trend channel here on gold, which has really been in place here now, going all the way back to 2005. So we've got a very strong trend channel, which is currently being supported right now around the current prices. There's actually a tighter trend channel here at the moment, which is forming a pennant on the daily. We've got lower highs and also higher lows. So we are going to get a resolution soon. We are at a bullish time of year anyway as we come into August here. We'll go on to the tighter time frames just to zoom in on the current price action at the moment on gold. So we had a nice breakout this week just above this consolidation zone. So you can see we broke out from the 1297 level. We've had a spike all the way up to 1322. This was a previous resistance zone going back to June as well. So you can see we reached this as a peak in June, and we've also now managed to find ourselves right back at this consolidation zone between the 1300 to 1322 zone. So we have managed to at the moment hold above the 1300 level. We look like we're going to close strong here on gold. We are actually at just above 2-week highs at the moment. I think we're coming into 3-week highs here. If we can get a break above 1325, that will be a nice close, possibly actually coming above almost 1-month highs there. If we can get a break and a close above 1325, that will be very strong for the gold market. We are getting a lot of safe haven appeal at the moment for gold as well. If I just have a look at tighter time frames here, you can actually see we've got a mini pullback just earlier on this morning on some strong US news, but you can see we're very quickly seeing buyers very interested in this, and we should see, I'd expect, further upside this afternoon as we go into the US session. Also, make sure you take a look at silver as well. So silver, we've actually managed to come down and find support at the previous key resistance zone, which came all the way back to the breakout from the FOMC back in June here. So you'll note that the 1974 level was the key area of support that we broke out from on silver in June, 16th of June 2014. That has now become support, and we've got a doji forming on the daily here. I'd be watching out for silver because we've already seen platinum break out to the upside, palladium's broken out, gold has broken out, and now we should see this just follow through into the other metals. So we'll be looking now for a breakout on silver and then a breakout also on copper as well, which is the next market, which is hasn't quite had as strong a breakout as you would expect, but we are expecting further upside. You can see there's a bit of a doji on the daily. We've got some support here around the 3.1512 level. Now, if this does break out to the upside and confluences with the other metals, we've got quite a lot of upside potential here for copper. So if you've missed some of the trades this week on your gold breakouts, palladium, platinum, turn your eye over to silver and copper, which we should see a delayed surge as we go into next week if the metals close strong. Okay, now we shall move across to the energy. So the energy is looking good here. What we found yesterday is certainly this week, this has been one of our top trades. We had a nice breakout here for the natural gas market. We were stuck in this consolidation zone for the best part of 2 weeks. Finally broke out earlier on this week. We peaked actually yesterday. We came out of a trade around 90 points profit, 3.893. This was just before the natural gas storage inventory. So you want to be as light as possible for major news announcements which affect commodities you trade. So for natural gas yesterday was the correct thing to do to close out of this position at previous resistance right at 3.983. You can see after the natural gas storage inventories that we sold off here. We've come back actually to retest previous resistance levels here, which have given us an opportunity to now go long again, which is up around 60 points at the moment. So natural gas, we've got a short-term buy on this at the moment. We see further upside, and we'll be looking to see if we can take out 3.983. If we take a look also at the other energies here, we did get a nice key level of support which held just yesterday on the Brent crude oil market. You can see actually the 104 zone. If you have a look further out to the historical charts, you'll see this very key level did actually hold for Brent just yesterday. We also had a nice buy opportunity, which was one of our top trades of this week, just around this 104 zone. You see a nice hammer here. Got a nice breakout to the upside there. It's about a 150-point move that we got yesterday on Brent. We are seeing a little bit of a sell-off, some profit taking, and I'm very curious to see where Brent is going to close the week here. Also, we've seen that WTI found support as well yesterday. You can see just around the 96.50 zone. If you're on a historical chart, what you'll notice is with WTI here, we do have a very key support zone on the raw charts there. You can see going back about 2 years, we've got a very key trend line which did hold at the 96.50 level. So you'll want to be watching out for this on WTI. Again, very curious to see how this will close today, whether we are going to be due more further upside next week or whether we will break down lower. The key level of support at the moment for the WTI market will be the 95.60 zone. If we do break lower than that, we could be due about $2 or $3 move lower here. But so far, we are holding on to that for WTI, and at the moment I'd really pay a lot of attention to natural gas today. We look like we are going to get a nice surge back up to 3.983 zone. Just looking at the grains at the moment, so we can actually see it's looking quite interesting actually with wheat and corn. Wheat did get a large surge earlier on this week. We're actually coming back down. You can see the breakout level here. We're actually coming down to test it right now, the 3.54 level where we got the breakout from earlier on this week. We are seeing a little bit of a breakdown in price at the moment. We're getting a retest of the 552 level. So very curious to see whether wheat is going to actually sell off and come back down within its larger downward trending channel as we come into next week here. Actually looking at corn, corn's looking a little bit bearish this afternoon as well. Corn, we are still stuck within this consolidation range. We've been range bound between 3.70 down to 3.350, so 350 down to 350 up to 370. You're seeing the market just tending to ricochet between support and resistance. If we can break through the 350 zone, we could be due quite a lot more downside here for corn. That will break through major support both on the monthly and the weekly. So we'll be looking out for that and confluence with wheat as well. So I would definitely keep an eye on wheat here. We'll see if previous resistance does become support here around the 550 zone or whether we do get a further breakdown and we come back down within this overall trending channel. So you'll see this trending channel at the moment, which we are finding there are some key moving averages actually just at this key resistance zone as well, which wheat has struggled to break through. So very interested to see how this will close. Right, so let's now have a look at the key news announcements as we go into next week as well. So the week ahead, the key events looking forward are as follows. So Monday, the 11th of August at 8 p.m. Central Africa time, 2 p.m. Eastern time, we have the federal budget balance. So that will measure the difference in value between the federal government's income and expenditure during the reported month. A positive number indicates a budget surplus, a negative number indicates a deficit. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Then Wednesday the 13th of August at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US core retail sales. Core retail sales measures the change in the total value of sales at the retail level, excluding automobiles. It's an important indicator of consumer spending. It's also considered as a pace indicator for the US economy. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish, which will inversely affect gold and silver, of course. Wednesday the 13th of August at 4 p.m. Central Africa time, 10 a.m. Eastern time, we have the US business inventories. Business inventories measure the change in unsold goods held by manufacturers, wholesalers, retailers. A high reading can indicate a lack of consumer demand. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Then as we come to midweek, we've also got, of course, the US crude oil inventories. Wednesday 13th of August, 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time. That data reports a number of barrels of crude oil commercial firms have in their inventory. Commercial firms report those inventory levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. Then Thursday the 14th of August at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US initial jobless claims. That data measures the number of individuals who filed for unemployment insurance for the first time during the past week. This is the earliest US economic data. Week-to-week numbers can be volatile. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. And then Thursday the 14th of August at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the natural gas storage inventory. So that, of course, will definitely affect your natural gas trades. The Energy Information Administration provide the natural gas storage report, and they show the change in the number of cubic feet of natural gas held in underground storage during the past week. So a higher than expected reading should be taken as bearish for natural gas, while a lower than expected reading should be taken as bullish. Those are the key announcements we need to watch out for next week for the commodities. And of course, during this time of year, which is very lucrative for the commodities markets, if you'd like to really take your trading to the next level, find out more about our live trading room, our upcoming courses in August, you can do so. Request more information at the Gold and Silver Club live trading room program. You also get access to our daily trade calls as well. Just go to www.jointhegoldensilverclub.com or of course contact our Johannesburg office. Just telephone +27 11083 8403. Also make sure you come to our website and subscribe to our newsletter. You'll get free weekly reports on the precious metals, energies, agriculture, live market analysis and prices too. Okay, so I'm just going to put it back on that screen. You can find out more about the upcoming dates for our workshops in August. Very simply, again, just www.jointhegoldensilverclub.com. Okay, so that's it for today's session, everyone. So good trading, and have a great weekend. We'll see you on the next one, and we look forward to hearing from those of you who'd like to find out more about the upcoming courses. Okay, so take care, have a great one, and we'll see you on the next one. Cheers. Bye-bye.